Whoa, what's going on, guys? Welcome back to Let It Grow Investing. I am Jeff. Thank you, as always, for being here. Man, we've got some big news to cover and get caught up to speed on the market. And I'm just kind of get back into the swing of things. A little bit more snow this week. School schedules were all messed up. I don't think that the kids go to school at all anymore. We had Monday off for the holiday, and then Tuesday for snow, late start Wednesday, early dismissal Thursday, and we finally had a full day Friday. My whole schedule, getting equipment back up and running. Sunday morning, went out and fixed the skid loader, put that back together. Some parts came in just so I can have it ready to go for potentially the next storm. So yeah, a lot of different things going on with me, but I am back. I am here, and we're going to try to get some different things covered. So yeah, first up, if you weren't listening to last week, I probably didn't push that episode out too hard. So if you haven't yet followed along, please make sure that you subscribe and follow the podcast. That way you're getting caught up with all the latest news here on the podcast. And that way you're not missing anything that's going on. That might be critical to your investing information if that's, this is one of the main ways that you get any kind of investing news. So yeah, that is definitely a change here for 2025 is what we're doing for the investing challenge. So I did want to kind of bring this up. I know that I made a bit of a spreadsheet last time, but I thought it might just be easier to do a watch list, right? So this is just my investing challenge 25 watch list. And this is going to be the 12 positions that we're going to be adding to, any given week for the year 2025. I decided not to basically pick from 5 different names every week, but we're going to try to cover why I think that these individual names on this individual given week might be the best purchase that we can make in that given time. So for I'll call it week 1. We got started late, but it was going to be Eli Lilly. So I did buy $200 worth of Eli Lilly. Ticker is LLY. I bought it at $732, I believe it was, on Monday. It's now sitting at $784. So we caught this one pretty solid, right? So I think I bought somewhere around lunchtime. So that's 11:15. So yeah, around 12 o'clock. Oh, sorry, Tuesday. So I did buy it around that 733 mark. So yeah, a little bit of uptrend here. This one has been trending down after weaker than expected Q4 numbers. So we're starting to bounce back. I do think that there's still a really significant amount of upside. We have a lot of growth projected for 2025. This looks different. Why do they do this? We got the average price target at 1017. High price is 1250. And on that low side, we still have about 15 or 14.5% of upside from this current point at 785. So definitely still got some room to go. I think this is a very safe play, and that is why I started the investing challenge this week buying ticker LLY. I still think that, after the sell-off with things going with Novo and then things, with Viking, those were slowing down as Merck was doing those moves. So we had a lot of different things going on. Their quarter 4 numbers weren't as strong as we had anticipated, and now they are starting to roll back in. So I think it was a little bit of an oversell situation on the market. So I used that to buy more shares, right? So I've been adding to a bunch of different, not really a bunch, but a couple different names heavily, right? And I'll go ahead and show you guys what I actually did purchase this week. This is actually my portfolio. I did go ahead and write some covered calls. Starbucks did one at 101 for this coming Friday. If that happens, okay, I don't need any more Starbucks. Disney, similar situation. $204 that I made, $2 per share, and they're sold in 100 share blocks. So $200 there. 70 cents per share on SoFi for a February 7th, 20 call. I believe that is at, it's currently like $18 right now. So if that gets to 20, I will sell it. But I have made $210 writing the covered call, $70 times 3 contracts over here. So I did that in the Starbucks one for $195. So making $600 roughly simply by writing these covered calls on some shares that Starbucks, if it goes, it goes. It's okay. Disney, that has been kind of dead money. A lot of people got some higher price targets on Disney right now. But man, it's been a rough one to own if you've been holding it for a couple of years. SoFi, man, I still think SoFi is a great growth stock long term. This would represent a little bit less than a quarter of my position if these 3 contracts were to execute. So I'm still very heavy into SoFi, and I still believe in it long term, but trying to generate a little bit of cash flow here as well. So again, stocks that I'm looking at right now, Micron, yeah, I was going ahead. I bought that 3 different times on the 23rd and the 24th. More Lilly, more Verizon. AMD, a couple different buys there. Lilly, a couple different buys there as well. So a couple different plays that I'm really trying to load up on. A couple things that I think make sense right now. And, kind of with the backdrop that we've got, kind of with, AI rolling up, AMD doing, fairly poorly against some of the other ones. Micron has pushed up this past year, but it is still, got a long way to go to catch back up to the market. Verizon, again, a 7% dividend yield. I'm just kind of nibbling there. Throw a couple more dollars in there to get that dividend yield. Next era, man, I am still bullish on the energy spend and what we're going to need for both more housing, more AI, more things plugged in. So I am bullish on that one long term. And it did have a nice move up on Friday. I think that, we bought it at 68, and I want to say that it was 72 as of Friday. Where were we? Let's go back to that watch list. Take a look here real quick, guys. All right, never mind. How can we get to this quicker? Accounts, watch list. That's probably easier. Let's do that. So investing challenge, next era energy, up 5% on Friday. So not a bad little purchase. Same thing with Eli Lilly, right? We were up $50 in the course of 4 days. So nice little gain there for us as well. So yeah, a lot of different things that I'm seeing here, a lot of different names that have traded down. Some of those small caps are starting to rally again, right? I told you guys to start the year they were coming down. They got traded off, but now a lot of people are re-entering those positions. We've also got, Trump taking office, and there's going to be some changes there as well. Hate them or love them, there's going to be some changes, right? So I think we need to use that for our advantage and try not to be so divisive as to who's in office or what it means for us personally, but how can we make money off of it? And I think you need to play that trend, right? So your money's in a game. Stock market is kind of a game with high stakes, I'll say, but if you know what some of these trends are going to be, you can invest based on those going forward. So when I'm looking at, what is Trump doing? Well, here we go. We've got the Trump's AI push, understanding the $500 billion Stargate initiative. So wasted little time in announcing the Stargate initiative, a $500 billion private sector deal to expand U.S. artificial intelligence infrastructure. So yeah, there's different, ChatGPT, OpenAI, SoftBank, Oracle, they represent the largest AI infrastructure project in history. So we've got all these main players. We've got, NVIDIA, AMD, Microsoft, Google, everyone getting a piece of this spend, right? So now we've got government-backed AI initiatives that are going to push these spendings further. So yes, we've got the big hardware people that are making the chips that are, doing all those things, making the data centers and the energy that's going to need to be running those. But we've also got to look at the software side. So the software side is going to, kind of lean heavily back into ServiceNow or Salesforce or, Palantir, right? So I'm looking at those names as to being now a government-backed AI spend. And when we're looking at this AI, right, it's going to be for healthcare. It's going to be for national security. It's going to be for military operations. And, Palantir is right at the forefront of that. So if they keep executing, I really think that they can be one of the main players in this space. And, the sky is kind of the limit. I was watching Dan Ives, and he's saying, no problem that if they keep continuing to execute, this is going to go from a $179 billion company to 4, 5, 600 billion, potentially $1 trillion valuation. So he's saying, it easily has the backing to get a double, right? Easily to 400. And then, within 5 years, potentially we have a 5x plus play to where this is at $1 trillion valuation. So, if we're at 80 now, 5x, we're pushing 400 on a stock price. And yes, the valuations are stretched. Yes, the PE is high. The price of sales is ridiculous. A lot of these different valuations do not make sense on Palantir right now. A lot of people have got a lot of hopium as to what Palantir does going forward. But I think that everyone knows that there could be a significant amount of downside risk if any one thing doesn't go in Palantir's favor, right? So we're looking at this right now. Analyst price targets of 49.27, a minus 37% downside. So the high is 90, the low is 11. Do I think we're getting to 11? No, I don't think we're getting to 11. Do I think we could hit 50? Yeah, I do. I simply do. And if anything does not go perfectly to plan to Palantir, any one report comes out, we saw that last week, right? It dropped down to what, $62 or something like that. And, if you were, a patient investor, you're waiting for those pullbacks in order to go ahead and purchase, right? So if I'm looking at the 5-day, I might have to go back a month and see where this thing did bottom out at. We got down to 65. I was a couple dollars off, but yeah, we got down to 65 on this. What day is this? Where is, that's not what I want. Where is the actual day? January 13th, that looks like. Yep. So yeah, it wasn't too long ago we were, mid 60s, and now we're, right around $80. And I think a lot of this run up here is from the hopium that Trump came out and said, hey, AI is going to be the next push. We're going to fund this thing. We do not want to get left behind. We want everything military and government to be securely encrypted. We want it to run more efficiently than anyone else. We want the data there. We want AI operating a lot of these things in order to be the leader in that space around the world. We don't want anyone else's AI running our government type stuff, right? It's just a matter of national security. So we want to have the best, have it be more encrypted, have it be more unbreakable than anyone else's. And that's where that spending comes in. So I think that the hardware companies have a lot to gain from this, but I definitely think that the software companies are going to have that higher valuation as they always do, right? So tough to say. I don't know that I'm screaming to buy Palantir right now, but I think if you have a long enough time horizon, it can start to make sense. So ServiceNow already kind of ran up. We saw this one. Where was it? This is not one that I closely follow. But if we were looking back last June, we were just north of 650, and now we're sitting at 1124. So yeah, this thing is run big time, right? And there's not much upside right now. We've got 5%, but looking better than Palantir. Looking better on this analyst projections of Palantir. Now, if we look at Salesforce CRM, let's take a look there and see just what that is looking like. We got 333. Around 19% of upside on Salesforce. So that could maybe be one that if you're looking to get into some AI spend on the software side, Salesforce might make a little bit more sense. And this is not a deep dive. This is just, back of the paper math, looking at this thing, 333, 396 average, overweight from Morgan Stanley. We could definitely take a further look at this, but definitely one that looks to be more fairly valued based on the numbers that I'm seeing here. And, you're not necessarily chasing just to get into Palantir. So be wary of the valuations that you're buying these stocks at. Be wary of things that, look too shiny, and you might not want to get into them at this given point in time. But definitely, I think that AI is still going to be the focus. We saw NVIDIA go up. We saw AMD go up a little bit. And one that I've been buying, right, is Micron. And this one actually went down this week. And what did they come out and say? I know that there were some misses on numbers. We had, some lawsuits. Always. Anytime anything happens, lost money on Micron. Get me to the news. I don't need to see all the actual, lawsuit stuff here. That is not why I'm pulling this up. Why AMD could surprise. I still think that is very prudent. We've got that is Netflix. Why am I getting this? I want just Micron news. Anyhow, their numbers came in less than we had anticipated. So Micron had a bit of a pullback. So that is one of the reasons I was buying this Thursday and Friday, was for the fact that we had a pullback. I don't necessarily think it has staying power. And some of their numbers for this recent guidance were actually pulled back down. So I am definitely looking at this as an entry point. It is still trading above where it was when I was trying to buy this one heavily, but it did give us a little bit of pause and a little bit of a way to get back into this thing. So, we got up to 109. We're sitting at 103, but if we look back here, December 31st, we were sitting at $84. It's come back down, but I still think you have a bright runway going forward with the amount of chips and spend that we need to build out everything AI, and the fact that everything runs on chips anymore anyhow. So when we're looking at the research here, still about 31% of upside. I still think we can easily get to 136. I think it could certainly surpass that. And I don't think that this downside is all that scary, especially where my cost basis is. So I'm going to continue to average in here in hopes that this thing it still has a lot of upside left to give us. So that's what I'm looking at there. Bitcoin and the crypto space is still rolling up really nicely. Let's pull up our WeBull app and see just how we're doing there. We've got crypto.com. I do have a link in the description if you guys need some help getting going. There are some free offers on WeBull and crypto.com. Bitcoin sitting at 105,712. So when we were looking at this, 2.5 years ago, and Bitcoin was at 17, and I said, now's the time to push. I think that would have gone really well for everyone that got invested. I really haven't done a lot of saying or pushing to that crypto needed to be bought in the last 20, 30,000 points. I really haven't pushed any of it. I can say average into it, but this is certainly not a push all in at any time for me. And hopefully you guys are a little bit, cautious about buying at some of these peaks as well. I know a lot of people have talked about it, especially over the holidays. Everyone was like, man, we got to get in on some Bitcoin around the, holiday parties that I was at. I was like, you should have been buying it at 17,000 or 14,000, anywhere sub 20,000, when I really felt that it was a worthwhile purchase. So now if you're getting in, you're a little bit late to the party, but there's still a ton of people thinking that this is going to go, 3, 4, 10x from here. Just a matter of time, right? So if you're late to the party, I'd say nibble in. Don't dive, don't jump in head first, but dip your toe in the water and go from there. But now if we're looking forward, if we're trying to see just what we want to be looking at for this week, where do we want to be on this list? Sorry, guys, I'm sharing the wrong page. Where do we want to be on this list? So I'm looking at, what stock, and I just made this list today, so no changes here. I have a feeling that, CrowdStrike's a little too hot. LHX makes a bit of sense here for me, especially with the push for military spending. Yes, they are trying to cut the spending, but I still think that military is going to be high. So we got 23% of upside there. Next era, this thing, we're getting a big push from the AI spend, about 18% of upside there. Lilly probably still makes some sense. We've got 30% of upside there. The one that I really need to lean on right now, though, is going to be AMD. AMD is still in the beginning innings of making a comeback and turning their ship around. And I think this is going to be, kind of inning 1, inning 2. And I believe that going forward, this thing is really going to take off. So for me, I think that with 10% downside, average upside being about 40%, I think we're in the beginning innings of really the AI spend, of AMD making a run at really producing the chips that are really in high demand. I think that is where I want to put my money to play right now. And that's not to say that NVIDIA is not a great company. I love NVIDIA. NVIDIA has made us a ton of money. NVIDIA's got around 24% of upside. So maybe if this is your portfolio, maybe you go ahead and buy a couple different, chip names. Maybe you're buying Broadcom. Maybe you're buying Lam Research, which Broadcom I actually just trimmed some, but there's a bit of downside there. But Lam Research starts to maybe make some sense. But really, NVIDIA and AMD are where I want to be putting the money right now. So that is what I'm going to be doing on Monday. Tomorrow, I'm going to be putting in $200 of my own money into our WeBull portfolio. Again, if you have not started, if you're trying to get some help, I do have links in the description for WeBull. You can follow along. You can put in whatever amount of money you want if you're trying to do fractional shares. That is what I'm going to be doing. And that definitely helps when you get into some of these names that are, $1,000 a share. If you're looking at a Costco, if you're looking at a Service Now, it is definitely helpful to be able to buy $100 a week rather than saving up for 2.5 months to potentially put in $1,000 a share if you're only able to save $100 a week. So definitely nice to be able to do that. So you can go ahead and click my link. I would definitely appreciate that as well. But so AMD, that is where I got to hang my hat this week. I think it is going to be the stock with the most limited downside. You've got a lot of potential upside. It's got the momentum of an AI backing bill coming in at $500 billion. You've also just got AI spend outside of the government. And I think that it has been oversold. So there's a lot of different reasons that I think that AMD could really have a great year going forward. In the whole Trump thing, the AI spend is just adding to those reasons for me. So I'm getting more and more bullish on AMD. And I think I showed you guys that with the fact that I've spent into this one. I actually sold out of some of my Broadcom, probably 10, 15 shares. I forget what it was. I sold out completely of McDonald's for a couple different reasons. One, I think that the RFK push. I think the fact that we're banning a couple different dyes and additives to our food already is going to wake some people up to what you're actually consuming and how it affects your body. I think that just some of the spend that's there is going to go elsewhere. And the fact that a lot of fast food has gotten quite expensive for even a family of four to go out. We went out to Five Guys, me and my two sons, and it was like $35, $40 for the three of us to eat. It's insane, right? And only one got a drink, right? The other two of us got water. So it's insane the amount of money that people are spending on fast food. I don't know that McDonald's is a great purchase right now. Did just get some recent downgrades. Let me see if I can find those. Let's see if we can get down here. That was a buy, but I think some of these price targets were lowered. JP Morgan says it's a buy with 280, which doesn't really make any sense to me. Why am I buying it now at 285 if your price target is 280? That doesn't make sense, John Ivanko of JP Morgan. But anyhow, I'm not the analyst here. But yeah, so I decided to pull my money out of there. I really didn't see the reason to be invested in it. The dividend is okay, not great. The growth is okay, not great. Yes, it's kind of a real estate play, but if I want real estate or dividends, I'm going to go with O, or I'm going to go with something else that pays me a little bit more. If I want growth, I think there's greener pastures out there. There's safety in McDonald's, but that safety is kind of being a little bit eroded by what the government's saying with what we're going to change in our food restrictions, which could then make McDonald's even more expensive. So then people are going to be pushed other ways to maybe, buy their own food, make their food from home, which could, again, benefit like a Costco that is, surprisingly has a lot of healthier options at affordable prices when you're buying in bulk. So a lot of different reasons that I decided to get out of McDonald's. Um, you know, some of it was the growth, some of it was the fact that the dividend just was not there, but a lot of it was the fact that I wanted to put that money elsewhere. So that's the changes that I made. I'm still very bullish on the AI chip spend, very bullish, probably more so bullish on software. However, Palantir is getting a bit too expensive for me right now. So if it drops back down sub 70, I'm going to be buying. And, right now it's already a fairly full position for me, but I will go ahead and add more to it because I am a firm believer in Palantir, in AI, and the fact that the government wants to basically back them. I think that is an even stronger reason to go ahead and get involved even heavier in this one. So yeah, the names that I have been adding big money to, this one, let's take a look here. And I do need to fund out this IRA for the year, but let's take a look. So the three that I've really been going after right now, Micron. This one I've been adding heavily. I just started this position September 11th of 24, and the value here is sitting at 23.5. If I'm looking at I did add a little bit more Tesla, but that's not one that I'm really adding to. But AMD, where's AMD? AMD, this is a put your money where your mouth is type thing. I'm down 5% on it, but I've got $24,000 invested into AMD, and that is only from December 5th. So December 5th to now, I have added, the all of the shares that I have in AMD. This is a newer purchase for me. So 196 shares. I'll probably up that to 200 just to be able to potentially write some covered calls if this thing gets, up to that 150 or 160 that I think we can get up to. I'll probably start writing some covered calls, maybe some long dated calls there. And then UPS was kind of one that I was adding to, but what was the other one? Oh, Eli Lilly. That was the one. 16,493 into Eli Lilly. So what's that? Probably 50-ish between the other two, 65,000 roughly between these three names since Eli Lilly and what was the last one? Was that AMD? Those were from December, and Micron was from back in September and December on these other two, if I said that incorrectly. So yeah, from December 13th to now, 16,000. I continue to try to add onto these when I can. And on E-Trade, you have to buy full shares, and that does make it a little bit more expensive to get into. But I was buying it a little bit more expensive, and then I tried to buy down here in these dips, 730, 720, 730, some of the 740 range. Sometimes I like just to have fun and put 77777. And buying shares at random numbers just for the sake of doing it. So yeah, that's what I've got there. Bought a little bit more LHX, not too much. That is still a smaller position for me at $7,000. One that I have had for quite some time. This was back from 2020, and those have done okay. Nothing crazy to write home about there. 22% gain, but I still believe in LHX long term. And I think that they have more growth than a lot of the other big defense contractors. That is where I've put some money to play. I try to show you guys what I'm doing, why I'm doing it, and hopefully you see that I'm putting my money where my mouth is. I'm not just spouting these off and not buying them. They are substantial plays for me. It's not like I'm buying one share just in the investing challenge and that's that. I really am trying to build up these positions because I think they can really grow for us. And that's what I got. So I trimmed Broadcom. That is, sitting at 46, but that's a 541% gainer. So I've actually only got about $7,000 in Broadcom when I originally purchased, and we've gained quite a bit there. So I did decide to trim a little and redeploy. And that's about all that I've got the time for today. But hopefully you guys can take a little bit of this and, at least start looking at some different names that start to make sense for you here and really can help your portfolio get to the level of success that you're looking to get at in 2025. So if you guys, I don't know if I can share this watch list. If I can, maybe I'll throw that right up onto the group page on Facebook. So please make sure you follow along there for any kind of updates. I will continue to try to do as much as updates as I can. But this is just a side project for me. This is just kind of fun, and trying to push people in the right direction of getting their finances on track. I see a lot of people struggling with different things, whether or not they're trying to retire or trying to just get started. So I'm definitely, kind of an open book. I don't mind sharing what I've got. It kind of took me a while to really want to share, my own portfolio and my own investments. But if it helps you, great. And, maybe you can learn from some of the things that I've messed up on. There's plenty, right? There's plenty. I'm looking at, ChargePoint. I'm looking at Neo. Those things have just done abysmal for me. So learn through some of the mistakes that others have made. Try to learn from the things that they've done right. And hopefully that'll set you up on a path to actually get to where you're trying to go on your investing journey. So thank you guys very much for stopping by. That is all the time that I got for you for today. And be safe out there and happy investing.